Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-seok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you as always for coming on.
Happy to be here.
Well, we just heard you talking about the Federal Reserve and rising rates. 75 basis points it was, as expected. That's 3 times in a row now. Chairman Powell saying they're going to keep at it until inflation comes down. We'll get to the reaction of the stock markets in a minute, but first tell us about the Fed's decision, what it means in particular for Korea.
Okay, well, the Fed had signaled 75 basis points since July, I think rather consistently, but the markets seem to have at first irrational optimism that the Fed would slow the growth of the rise of interest rates, and then perhaps after the August inflation data came out for the United States, perhaps an irrational pessimism that the Fed would raise the rates even faster. Some of that has become true with this current announcement. While the 75 basis point increase was widely expected, until a couple of weeks ago, the expectation was that at the end of the year, the interest rate for the United States would be 3.75%, maybe 4%. But now, when we see the so-called dot charts, the announcement that what the individual FOMC members expect at the end of the year, that centered around 4.5%. So that is 0.5 percentage points higher than what the market had been expecting before, and that, I think, has taken the global stock and financial markets by a bit of a surprise, but a lot of economists and analysts have been arguing that you do need 4.5% interest rate or higher to cut the inflation rate, which is stubbornly high. Now, the August U.S. inflation data showed that while the headline inflation may have peaked, it fell from 8.5 to 8.3%, and that's down from a high of 9.1% in July. It didn't fall as quickly as analysts had thought. And in addition, if you look at core inflation, that strips away energy, which had been the main contributor of the current high inflation, and food, which is another category which experienced very high inflation. The core inflation actually rose in August, not only on a 12-month basis, but even on a monthly basis, it rose from 0.3% in July to 0.6%. So I think that had scared not only the market, but the Fed as well. So they have now announced that unless there's big changes, the Fed is likely to raise the rates to 4.5% by the end of the year, and that means at least one 75 basis point increase and another 50 basis point increase in all likelihood. Now, the problem for Bank of Korea comes because the Korean won has been losing value very quickly, and the big reason for that is the difference in interest rates. When the market corrected itself, and instead of believing that the interest rate increase would be slow rather than quickly, but then turned its opinions around, that was basically when the won started to lose value very quickly. And now, unless the Bank of Korea also accelerates its interest rate increasing schedule, the won may lose even more value as well. As noted in the previous story, the Korean won has now broken the 1410 barrier. So while the Bank of Korea had signaled that it would raise the interest rates by 25 basis points in October and November, they probably cannot afford to do that anymore. Previously, at the end of the year, the interest rate reversal for Korea was thought to be perhaps around 25 to 50 basis points. But now, if all sides followed pre-announced schedules, it will be as high as 150 basis points. And even during the previous periods of Korea's interest rate reversal, where Korea had lower rates than the United States, that reversal, the gap between the two countries' rates, never went beyond 75 basis points. So I don't think Korea can afford to have such a big gap in the interest rates, and that means at least 2 rounds of 50 basis point increase for Bank of Korea in the 2 remaining monetary policy meetings, and the possibility that Korea may even take a 75 basis point step.
Well, a painful step for households, as you mentioned in the previous report, but one that, as you say, might have to be taken. Well, stocks on Wall Street overnight started out higher, but as the events of the day unfolded at the Fed, they closed significantly lower in the end. All 3 main indices down by about 1.7%. Tell us about the moves in the global equity markets.
Okay, well, in the United States markets, it was a very strange day. The U.S. indices started the day, that's before the Fed's announcement, S&P slightly lower than the closing value the day before, Dow and NASDAQ actually slightly above the closing value the day before. And then the value held steady for most of the day. Then at 2 o'clock when the announcement by the Fed was made, the market dropped very quickly and dropped for about 15 minutes. Then it started rising again. But around 2:45 U.S. time, 45 minutes after the announcement, the stock prices started falling and never recovered. So as you mentioned in the previous story, Dow and S&P lost about 1.7% of value. NASDAQ lost about 1.8% of value. Year to date, Dow has lost 17.5%. S&P for the year has lost 21%. NASDAQ has lost 29.1%. During the last 2 times that the Fed raised the rates by 75 basis points, the market actually went up the day of the rise of the rates and the day after. But 2 days afterwards, the stock market started falling. But this time, the market fall seems to be starting a lot earlier. That may mean even more consequences for the U.S. market. For Europe, FTSE, CAC, and DAX were up yesterday between 0.3 and 0.9%, but all are down. They started just trading, and all have opened down. Asia, Nikkei, and Hang Seng have all down, lost value today. Hang Seng has lost more than 2%. Bank of Japan has also made their interest rate decision today, but they decided not to raise it. They decided to hold it steady, and the yen has now broken the 145 yen per dollar barrier.
Right, and Professor, you've mentioned the Korean currency and how it's at more than a 13-year low, but in the stock market, perhaps, could you just briefly, we're almost out of time, what happened today in Korea's domestic market?
Okay, well, Kospi lost 0.63%, Kosdaq lost 0.46%, and the big news, of course, is that the won has broken the 1,400 per dollar barrier. It lost 1%. And ended at 1,409.71 per dollar, but temporarily it did break 1410 barrier as well. This is bad news for tech stocks, including Samsung and SK Hynix. Not only are they stuck with falling semiconductor markets, but the rising interest rate affects technology stocks badly, so they may be in for even a further and faster decrease.
Well, truly uncertain times. Professor, thank you as always for coming on the program. We really appreciate your insights.
Thank you.